Good morning. The financial world is still reeling from Jeff Bezos' decision to step down after the day after July 4th. That's July 5th for anyone too busy to figure it out, which is the day the company was incorporated in 1994. Good morning. Here's the breakdown. Markets were up on the news and more pertinent stuff, led by the Russell's %89 increase as the 30-year mortgage rate climbed 3 ticks. We're seeing a 4.2% contraction in applications this past week, which confirms administration concerns. But if anyone thought Biden's green policies would be different from Trump's, well, he's okayed a controversial ConocoPhillips drilling project in Alaska. Perhaps yet another reason Canadians would like to keep borders closed with their southerly neighbor for now. That's according to Tyler Durden at Zero Hedge. The dollar strengthened steadily throughout the day and has hit its Friday high after double bottoming Wednesday, actually. We're looking at a failure to cross the $90 resistance level and, well, it's basically a repeat of the setup from 3 weeks ago, which resulted in another lowering of support, although the fundamentals may have some surprises for us. We have today another preliminary reading of the U.S. GDP for the first quarter, alongside jobless claims, durable goods orders, consumer spending, and finally pending home sales for April, all ending at 2 GMT, so stay alert. European indices straddled the zero yesterday, both the DAX and FTSE a tick to the south. As the EU-UK war of words continues, the pound seems to be taking the brunt of it for now, after union negotiator Michael Barnier said that the UK is welshing on its commitments, primarily fishing rights and Northern Ireland. In about an hour, we'll be hearing about Italian consumer confidence, then business climate for the union an hour later. Chinese markets are marginally up this morning, led by Shenzhen's 1/3% increase. Both the Hang Seng and Nikkei are down, with the Aussie Isles mixed. New capital expenditures down under increased by 6.3% in Q1, while Chinese industrial profits grew by a much lower rate in April than the month before. U.S. Trade Chief Catherine Tai held the administration's first formal talks with her Chinese counterparts yesterday. No smashing headlines there. According to an interview in Bloomberg, the U.S. concern with the world's second largest economy, China, is only growing as it becomes more tightly controlled by President Xi Jinping. America's NFC coordinator for Indo-Pacific Affairs, Kurt Campbell, talks about the nation's wolf warrior diplomacy and a leader who is not terribly interested in economics. According to the interview, Xi has disassembled the collective leadership, and he's extremely ideological. Playing China, apparently, according to American rules, is no longer an option. Tonight, Japan will publish CPIs and its unemployment rate for April. Oil seems to be more concerned with the threat of Iranian oil than with the EIA's rather welcome 1,000,006-barrel drawdown this past week. We're guessing that rising prices has the U.S. administration worried, and they'll probably be welcoming Iranian oil, even if that means turning a blind eye to that nation's regional ambitions. Meanwhile, cryptos continue creeping down despite the news this morning that PayPal is enabling token withdrawals to third-party electric wallets, and yet another article in Bloomberg that has the mega investor Icahn stating his firm is ready to invest in a relatively big way, quote unquote. And yesterday we saw gold retreat from its high at 1910. Now we need to take a strong, hard look at whether we're into a bump on the road or a turnabout, a junction, if you will. The asset completed a head and shoulders yesterday, then double bottom just above a previous resistance level, and now we're looking at some indecision as the volumes taper off. Maybe for this afternoon's indicators, maybe for oil to take a step, maybe for geopolitics to boil over. What's certain is this could go either way, and when it does, it should be dramatic. NVIDIA produced a lively quarterly report yesterday, beating expectations with an incredible 84% jump in revenues to $5.7 billion. EPS was 106% up to $3 per share, but share values were hit by the question of how much longer this could last. That's given the volatile crypto mining market. Also, their purchase of ARM AI is still under the regulatory spotlight. Xiaomi also showed a 55% improvement on its revenues to the Chinese equivalent of $11.7 billion. Today's reports will be bringing us Salesforce, Costco, Medtronic, alongside Dell, VMware, Lenovo, Dollar Tree, and of course GameStop. That's where we'll have a chance to see reality take down the hype. Meanwhile, continuing its kowtow, HSBC has decided to pull out of US retail banking to concentrate only on the rich. And on that lovely image, we bid you a fond adieu.